Australia's unemployment rate has dropped to its lowest level since 2008, with unemployment for December at just 4.2%. Joining me now is business reporter Edward Boyd. Good afternoon to you, Ed. These figures show Australia's labour market was recovering strongly in early December.
The ABS say this is the lowest unemployment rate since August 2008, just before the global financial crisis. And they say if the rate goes below 4, you're going to have to go back to the 1970s for unemployment to be at that level. So large amount of jobs were created during the month of December. If we can bring up the figures and show you, unemployment rate fell down to 4.2% from 4.5% in November. 64,800 jobs were created during the month, and about 42,000 of those jobs were full-time, about 23,000 of them part-time. The participation rate, that's the number of people either in work or looking for work, that stayed stable at 66.1%. The underemployment rate fell to 6.6%, which is a good sign, and hours worked jumped by 1%, or 18 million hours during the month. So obviously employers in the first couple of weeks of December were putting people on more shifts to deal with the big Christmas shopping and retail spree that we know December to be. The thing with these figures though, Julie, is they were taken in the first 2 weeks of the month, and we know the Omicron strain slowly started to close down some of Australia's big cities, particularly on the east coast, in the last couple of weeks of December. So economists say that the unemployment rate may tick up slightly in the month of January, but it's still at a very low level, 4.2%, lowest level since August 2008. And all the jobs growth, according to the Bureau of Statistics, a lot of it has come from both New South Wales and Victoria as their economies reopened in the months of November and December.
So today's numbers may force the Reserve Bank to lift interest rates earlier than expected.
The Reserve Bank, in its most recent economic forecast in November last year, were tipping the unemployment rate to reach 4.5% by June 2022, so just 6 months away. It's already at 4.2%. It's much lower than what the Reserve Bank was expecting. So they're going to have to react to this in some way. The first cash rate meeting of the year is in February, just a couple of weeks away. We've also got some critical inflation data coming out on Tuesday next week, where we're expecting to see inflation for the whole year of 2021 to be at about 2.5%, which is smack bang in the middle of the Reserve Bank's target band. When it gets to that level, they've said consistently they want to start raising interest rates. So we'll hear from the Reserve Bank in February. I suspect they may start to wind back their economic stimulus that they're providing to the economy at the moment a bit quicker than expected, and there's the potential for interest rate hikes later this year, Julie.
Ed Boyd live in Sydney, thank you for that update.